Good to go. Hello, everybody, and welcome to this week's edition of Selfwealth Live, our technical analysis edition. Here for another great week. Nearly the end of October already, Jace. Can you believe it? How are you today?
Yeah, flying by, Rog. Flying by. Yes, I am all good. I'm good. Ready to get into a hopefully an interesting show ahead.
That's good to hear. I can see there is a lot of people already with their questions online and ready to go. So before we get to the disclaimer, I might just explain what happens with this show. If you haven't been, first of all, welcome all the guys that have been here over the many months and years with us, and any newbies. What we do is we go through our three major markets that we offer at Selfwealth, and that is the Australian market, the US markets, and the Hong Kong markets. From an overall indices perspective, we look at the charts there. If there's any general questions, we'll try and get to them. Specific general questions, we'll try and get to them. And then we get onto everyone's tickers. Now, the rule of thumb is we will try and get onto one ticker of everyone's as best as we can before I draw the line in the sand. And that line in the sand will be in the comment box there. So I've just got a gauge to try and get everyone's in. So look out for that. Look out for that comment that says we won't be accepting anymore, obviously. And one more thing, which I'll talk about after the disclaimer, being October, and that's our October Selfwealth promotion. So I'll get to that after the disclaimer, though, Jace. If you want to go through that.
Okay, quick note on the disclaimer. So, of course, everything today, general commentary only, no personal advice today, and this just goes through all of that. I'm also not part of Selfwealth. My business is Motion Trader. So I'm up the top here, licensing, general commentary, all of that. And beneath there, you'll see the Selfwealth disclaimer. Same thing, licensing, general commentary. It is all on that slide.
Fantastic. All right. So before we get on to the latest break of high on the Australian market again today, it looks like, I wanted to reiterate, it's probably the last couple of weeks that we're going to do this well, it is the last couple of weeks we're going to do this promotion. It was only for October. And that is any new clients, any new person who would like to try Selfwealth, obviously, you're eligible for 20 free trades on the account once you've signed up. So there's a link down the bottom there. If you want to sign up, that will offer you 10 free trades automatically. But then once your account's open, you can simply send an email to an email address that'll be on this description after the show. And it's basically sales@selfwealth.com.au, but all the terms and conditions will be on the description after this show has been completed. All right. And the keyword for this week is, wood, and that is the famous investor Cathie Wood, right? So from the famous investor Cathie Wood. So that's the keyword that you've got to mention in the code word that you've got to mention in the email to be eligible for those 20 free trades. And once again, this promotion is only valid until the end of October. So we'll run it one last time next week. All right. At the start of this month, we did open this up to existing clients, but that allocation of free trades has now been exhausted. So if you're an existing client, apologies, you've missed out, obviously. But if you're a new client and you wanted to try out the Selfwealth platform, then that's what that promotion is there for. Okay, we are good to go then. Plenty of people on the other side of the line, good to go as well, Jace. Let's have a look at that Aussie market running hot.
Okay, so into the ASX 200 to get us started for today. And I think the ASX 200 is all-time high last Thursday, and it's getting very close again today. I think this probably comes as a surprise for a lot of people, as it follows a 3% down day in the US a few days earlier. Remember on Friday, about a week and a half ago, the US had a big down day. And often when we see big down days in the US, it often leads to volatility locally. But instead, we've got a new all-time high last Thursday and a nearly new all-time high today. And I think that's telling. And that's because when people are bracing for a negative response, but instead the market holds its ground and in this case has pushed on to new highs, I think that's often a bullish sign. Just look at this latest price action. All the pullbacks recently have been contained around the moving averages. So that's the 50-day and the 100-day moving averages on this chart. And that's been the case for the last 5 months. You can see the pullbacks over the last 5 months. Well, they haven't even come back to the 50-day moving average until early in September. But nonetheless, the moving averages contained all those pullbacks. And this tells us that dips are being bought and the odds continue to favour upside while that's the case. And this is typical of bullish phases. Like, just look at the price action during 2024. And there were lots of pullbacks to the moving averages. You can see them the whole way up, all these pullbacks to the moving averages. Sometimes prices rebounded quickly. Other times they consolidated for several weeks, but the underlying trend was up for around 12 months. Well, actually for over 12 months. And I think we have a similar situation playing out now. And despite all the headlines, the underlying structure here, it remains positive. We have, as I pointed out, we've got these rising moving averages, prices above the moving averages, and there's this long-established sequence of rising lows, rising highs. And these are, of course, all bullish markers, and I think they set up a bullish backdrop. It's also interesting to look at what's happening in the financial index. So let's just jump across to the ASX 200 financial index. And what we have here, prices have been coiling up. Just put a little box around that. Prices have been coiling up for the last probably a couple of months now. And this has also been along the moving averages. You can see they're coiling into the moving averages. So again, the 50 and the 100-day moving averages. And when we get these price compressions within a rising trend, they often become a platform for even higher levels. And I think that's what's likely setting up here. So prices hit a new all-time high last Thursday. Prices hit a new all-time high last Thursday, and they're on the verge of a breakout from this range. I think the last Thursday prices did try to push high, but that wasn't sustained on the day, and they came back to the upper end of the range. I think a break above Thursday's close, or break above Thursday's high, I should say, I think that would be enough to say the breakout was on and momentum was resuming. And with financials being such a big part of the local market, I think that if we see strength in this segment of the market, coupled with the strength we're seeing in the mining sector, it's I think it all points to that bullish environment generally for the ASX.
Well, as we know, obviously financials and both the commodities mining sectors are huge in Australia, so it all sounds like good news. We're going to get on to rare earths. I see some people talking about rare earths, obviously, and there'll be tickers to get into there, I am sure. US, is that following suit? What happened there overnight?
Yeah, so let's jump over the S&P 500 and how quickly the focus can change. Just a week and a half ago, all the talk was around this 3%. Quick 3% decline, and that was on Friday about a week and a half ago. And now the S&P 500, it looks to be poised for a new all-time high. And I think this is especially difficult for people following the headlines. They get exposed to this ongoing flow of emotional triggers on the social media. It's just an ongoing cycle of this and that, and it really, I think it often leads to poor decision making. It's for me, it's following the price action, not following the headlines. And despite the fears, I think all the evidence on this chart at the moment, I think the evidence points to this latest bout of volatility being just another pullback within the bullish trend. At this point, all we have is 1 day volatility. Sure, it was a big day; it was down 3% in a day, but again, it's just 1 day. And this is all set against a backdrop of rising moving averages. So it's 50 and the 100-day moving averages continue to trend higher, and price, of course, remains above those moving averages. It's always possible we see some more consolidation in the near term. For instance, maybe we see prices pull back and retest the moving averages and just coil up some more, like I was showing in the financial index. Like that sort of structure is always a possibility. But I think that overall, the balance of probability still favors the bulls. I want to show you the latest American Association of Individual Investors survey. This was really interesting. This is from last week. So just have a look at this. It came out last Wednesday. So this is just after that big 3% down day. And this is one of the most, you can see this this top red section. This is one of the most bearish readings in months. And I find it fascinating that near an all-time high, we have below average bullishness. So you can just come down, you can see the historical view about the bottom half of the chart. So historically, around 37% of the market is bullish. At the moment, it's 33%. So we're near all-time highs, but we have below average bullishness and we have above average bearishness. So bearishness is historically around 31%. It's currently 46%. So that's not what I'd expect just before a crash or a major top. I'd expect it the other way around. People super bullish and not too many bears, but the bears are almost half of the survey. The other interesting thing to note is that it's really is a polarized market. Look at the neutral percentage normally. Historically, 31% of people are neutral, neither bullish nor bearish. Look where we are now. It's currently 20%. So polarized. It's one or the other. People are either bulls or bears, and most happen to be bears. So it seems to be a market full of people with strong views. I'm neither a diehard bull. I'm not a perma bear. For me, it's simply a case of assessing the market structure, following the price action, and as it stands, when we come back to this S&P 500 chart, we've got rising moving averages, prices above the moving averages, long series of rising lows, rising highs. So they're all classic trend markers of a bullish environment. I think the play here, it's staying long while that remains the case. I want to be positioned with the trend. I don't want to be betting against the trend.
Okay, some great points there. And I like how you brought up that that comparison there, the buyers and the sellers. Fantastic, Jace. Thank you for that. Let's have a look at the Hong Kong market.
Over to the Hang Seng, and now this is the largest pullback we've had in the Hang Seng since the March April correction. But so far it looks like it's just that, a pullback within a rising trend. There was a strong bounce off the 100-day moving average yesterday, that being on Monday. So a strong bounce off the 100-day moving average. The key now is for prices to stabilize around the moving averages. So we've got the 50 and the 100-day moving averages. I want to see consolidation around here to above the moving averages. Maybe prices move into a range. All sorts of ways this can play out, but I want to see that stability around the moving average. We don't want to see ongoing weakness beneath the average. That would mess with the bullish structure. But that's not what we have at this point. For now, it looks like the dip's being bought. For me, it's a case of staying with the incumbent trend until there's a good reason to do otherwise. Over in the Chinese market, and the same goes here. We've had a strong rebound off the 100-day moving average, strong rally off that. And I think this is a good sign. I think it's a sign that the dip is being bought. It's probably not surprising. Prices are pausing around this 15,000 region. And that's because this is a big resistance area. We just compress this. We've looked at this before. It goes back 10 years. You can see we've got several high points, some lows when it became support, more highs. It's a notable resistance point. So it's not a great surprise. We are getting that pause now. I think if prices can continue to consolidate around this 15,000 mark, I think that could lead to a new platform that could sustain a break above the resistance and above the recent highs. I think this is an emerging bull market, and I think it has plenty of upside potential. It's one. I think it's one to keep following, keep watching.
All right, fantastic. Thanks, Jace. Okay, let's get going with tickers. Plenty of them already. So first question I have here is via email, actually. Which is the better bet but we don't bet, do we, Jeff? Which is a better bet, DRO or EOS?
Okay, let's check them both out. Look, DRO's it's a motion trader stock. It's still on the motion trader portfolio. It was first signaled in this most recent
Mm.
round, back probably in around April, when it started to break. The moving averages crossed, started to break to a 70-day high. So that buy signal would have been back around in the low $1 region, and it's now up around $5. So it has been a big rally. This is a stock I'd probably hesitate to buy. It's had a really powerful rally off the 50-day moving average in mid-September, but then it's given back much of that rally quite quickly. If I was long this stock, I'd be happy to stay with it, use that wide trailing stop. That's what's been working so far. That's what's made it possible to capture this big gain. But in terms of buying, it's like I'd probably prefer to leave this one alone for now. Maintain a position, sure, but entering a new position, I'd probably like, at the least, I'd want to see it consolidate and stabilize above the moving average, and maybe build a new platform for higher levels. But yeah, wouldn't be rushing to buy. Let's check out EOS. Look, same commentary. It's come back quickly to the 100-day moving average. I don't like when stocks come back abruptly like this one has. I like to see consolidations where they fall and then they stabilize, and that's the dips being bought. When it just keeps falling and falling and falling, the dip's not being bought. So I'd steer clear. If I was still if I'd participated in this big rally, I'd be using a wide trailing stop. It'd be getting close to where I'd say maybe enough's enough, but I could give it a little bit. I could give it a bit longer still. I'd use a calculated one, so I don't have to make those emotional decisions about where to place it. But again, I'd need to see it stabilize before considering buying. I don't want to buy into something which is falling so abruptly.
Okay, fantastic. Thank you. All right, let's get on to.
And also, Rog, these big rallies we see, it's like big rallies like this often lead to multi-month and consolidations that sometimes last for a year or more. It's we shouldn't look at what's happened in the immediate past and then just extrapolate that forward into the future. Will we see a mirror of the rally of the last 6 months over the next 6 months? I think probably not. Anything can happen, of course, but don't look at a stock that's gone up several 100% and go, well, okay, that's what this stock does. It's like, sure, it may go a lot higher, but there also could be a big intervening consolidation where it just chops back and forth for months and months. And so I suspect the fun's over in a stock like EOS, given the sharpness of this decline. It's not one to be rushing into.
Yeah, I think you make a great point, though, Jace. Most people that don't are not looking at it from our perspective are looking at a very bullish, stock, right? But now it's come back quite abruptly. It's kind of like, where do you to get in now? You're kind of almost trying to catch this falling knife. But the fact is that you're saying allow it to consolidate a little bit. Let's see if it's going to either continue going down or just give it a base for buyers to purchase off. I think it's kind of a smart move, right? So
classic boom bust price action, which we often see in stocks, and this may do something completely different. But the classic boom bust scenario would be you've got that parabolic ending, the hard fall down. People who are thinking, okay, now's my chance to get in, and they fuel a rebound, and then that rebound doesn't make new highs, and then over the year or two that follows, it continues to deflate over time. I've seen that sort of price action so many times over the years. I'm not predicting that's what's going to happen here, But it's a sort of thing to be aware of, like looking at a boom and going, okay, I've got my 50% discount, now I'm in. It's like it doesn't necessarily mean it's got to be replicated. It could be, the party could be over, and it could be like, the last hurrah, and then you get that lengthy sell-off. It's a sort of price action we do see play out in boom stocks. Like DRO, I think if we just look back to DRO's previous boom, like there, you can kind of see it play out here. There's the parabolic liftoff, the crash, those who following it thinking now is my chance. You got the bounce, and then you got the lengthy deflation. Don't be surprised if we see that sort of price action play out in either of these stocks really at some point. I like stocks at lower stages, not after huge liftoffs. I think the risk reward is more favourable when you're playing the setups, when you're getting the earlier rallies off moving averages, not buying after a parabolic surge to the upside.
Yeah, not suffering from FOMO as well, right? So, but looking at the other...
Always another stock, always another opportunity. If you miss it, you miss it. So be it. Wait for the next one. There'll be other stocks like it over time.
All right. G'day, Robert. Let's have a look at NMG, please.
Yeah, upward trends in place, rising moving averages. It's a low price stock. It's come from less than 0.5 cent. And it goes further back. Look, if I was on this, I'd continue holding it. It's doing the right thing. It was a nicely structured rally. So rally, consolidation into the averages, rally, consolidation, rally. Maybe we're going to get some consolidation here while the moving averages catch up. But I'd be happy holding it if I was in it. I probably wouldn't be a buyer here because, I'm probably looking at like a little bit too much. Look, maybe 25% of risk, but I don't know. I'd probably just leave it alone. I'd rather more of a, like if it builds a sideways consolidation like it has in the past and the averages catch up, that could be an entry opportunity. For me, this is a hold, not a buy. See where this trend goes. See if it does become something that extends considerably higher. But in terms of entries, it's a wait for the next consolidation, see whether we get some good levels to work off.
Okay, fantastic. The next one along is YAL. YAL.
It's not doing much. It's just sideways in this range. This is what I was saying with EOS. So like EOS has had a big run, just like Yancoal had a big run during 2022, into late 2022, and it's now been several years of just chopping sideways. So big moves often lead to big consolidations. Always keep that in mind. It's at this point, I'd leave it alone. It's like you can just draw some roughly. There's the upper resistance, upper support, and we're just oscillating either side of the moving average. So it's not a stock I'd come in and buy now, because this range could last for who knows how long, many more months or even years. Don't know. I'd rather buy a breakout to the top side, and until then, leave it alone. If I had it, particularly if I had it from lower levels, I've got no problem holding a stock that's maybe in profit, but is in these lengthy consolidations, collecting dividends along the way. I'll show you an example if I can just quickly think of it. It's a stock I've had, so it's a completely different stock, but it's just an example of APZ, I think is a code I'm after. This is the one. So here's a stock which it's a motion trader stock. I got in somewhere here in 2021, I think. And look at this, went through, had a good period, then went through this lengthy consolidation. The consolidation went for over a year, but I'm in at a good level. I'm in profit, it's paying dividends, so I've got no problem sitting through a consolidation. Just don't want to buy it for the first time while it's consolidating because you don't know how long it's going to go for. But then eventually it broke higher and it's had a really good run. So it's worth being patient if you're in and you're in profit and the stock's paying you to sit there and wait. But you just don't know how long. So I don't think there's an urgency at this point to buy. I'd rather wait for the breakout.
Okay, fantastic. Hi, Shamina. Let's have a look at LTP, please.
Yeah, it may be building something. Like it's gone from below the averages to above. The averages have crossed. We're getting this consolidation now. It's like I think this is a key moment. Like, if it continues to lose ground and starts slipping back below the moving averages, it starts to lose its bullish structure. Ideally, would see it just continue to hold the averages. Maybe just firm up a bit of a base, and then from there, maybe we start to see prices push higher. But I think it's a key time. We really do need to see it hold the line around current levels. I would have preferred it we had a bit of a zigzag looking pullback. Had that been the end and get consolidation and breakout, but we didn't get that. Instead, we got another decline. So maybe that's a warning that the trend doesn't have as much strength behind it as maybe we would have liked. It's not a buy at this point for me. It's if I'm in around current levels or maybe a little bit lower or maybe a touch higher, I could give it a bit longer. I'd probably have a stop loss. Maybe looking at these lows from around August. So maybe a stop could be around 39 cents, 40 cents thereabouts. Just want to have a point where I rule off on these stocks and go, okay, it's not working. I can always get back in, but I want to have a point where I just say it's not working because I don't want to hold on, and then we find us back down at 24 cents, and then we're going, what do we do now? I'd have a line in the sand earlier. And if I was thinking of buying, and if it does stabilize at current levels and start to rally off the averages, maybe that's an entry point. But it's a potential developing trend, but it really does need to hold the line around current levels, I think.
Okay, fantastic. Thank you. G'day, Jennifer. Let's have a look at Linus, rare earth. Could you give me your thoughts on Linus after Trump announced the rare earth deal?
What's their code again?
Can we
LYN? Is it LY? No, it's not LYN.
We'll put in LYNA.
Oh, there it is, LYC. Got the first two letters, just struggling with the last one. Trend's up. Trend remains up. A lot of news around this stock. Today's price action is interesting. How it opened at its high. It's now trading on its low. It suggests to me that it's getting tired. It's like this has been from $7 up to 20 odd. So it's up nearly, not quite a couple of 100%, but it's up a lot in 4 months or so. If I was on board, I'd be staying on board. It's a motion trader stock. I don't have it. But if I had it, I'd continue holding it. My trailing stop would be back below the 100-day moving average. I'd be using my ATR, my average trading range stop, which is calculated, which is consistent. That helps me stay on these big trends, give them lots of room to move. But I wouldn't be a buy here. I think there's a reasonable chance we see more consolidation. We do see this come back towards the moving averages, and then we see what happens. Does it start to just hold its ground and develop a new base at higher levels, or does it start to give some ground back? But I think the key is, if on board, staying on board, letting what's been working continue to to continue to do what's been working. What's been working has been holding and sitting through the consolidations and letting the trend run and see if it can continue to do so. And that entails giving it room to move. But in the near term, it does look like, a lot of news around it. Maybe it does need to pause in the coming weeks.
Okay, thank you. Let's have a look at the next one, which is, 1 second here, CWY.
Yeah, it's it had the makings of an early stage trend, but it's not following through. Instead, now we've got this sharp decline to the downside. Maybe this is not the time for this stock. If like for an emerging trend, I'd want it to like be holding on to recent gains. It had a nice rally from early September. A bullish structure would have been able to then hold above the moving averages, consolidate, and then break higher. Instead, it's quickly reversed. It's now back below the moving averages. I certainly wouldn't be buying this one. This would be depending on when I bought it. Like say I bought it in July as it started to just got from below to above the moving averages, consolidated into the averages, broke higher. So look at this point here, it had the makings of a potential trend, but not every trend will follow through. A lot will fail. So it'd be now if I'd bought in July, it would now be getting close to my time exit, and I'd be saying, look, this is not working. I'll just take a small loss and move on. I use 60 trading days. So this is now 70 trading days. So had I bought on that breakout in July, I'd be now saying, okay, it's below my entry point. It's been more than 60 days. 60 is not a magic number. It's just what I use for a time stop that gives the stock plenty of time to get started. But if it doesn't, I'd just move it on. I'd be moving it on. That said, there's nothing also wrong with using an initial stop loss and giving it a bit more time. But I'm not enthusiastic about this stock's near-term prospects. It's just not doing what we'd want for a stock that was showing bullish signs just a few months ago.
Okay, thank you. Hi, Simon. Let's have a look at ELS.
Well, it's again, we talked about this sort of profile with EOS at the beginning of the show. You get the big run, and then you get the decline, and then you get the rally back, and then you get more downside. Now, this may stabilize here. We could say, like, is this like your classic zigzag correction? But I'd want to see it stabilize. I'd need to see it stabilize and move back above the moving averages for this to start to shape up as a potential entry. So I'd need to see it rally back above the averages and stabilize, and then from there start to work its way higher. If I was in at good levels, I could. Let's just put a wide trailing stop on this and see what it shows us. Yeah, like it's been such a volatile stock. If I was in at good levels, I'd still be holding. I'd be using a wide trailing stop. I'd be giving it a lot more room to move around. I wouldn't buy it at this point. I'd want to see it stabilize and get back above the moving average before I considered buying it. But at this point, if I was in at good levels, I'd continue to hold it. If I bought at the highs, well, it would have exceeded an initial stop quite a while ago. I don't think I'd be there anymore. What I don't want to see, price action, which would be a bit of a red flag, would be if it can't really bounce and we start getting like a shallow consolidation below the moving averages. That would be a point of vulnerability. because that can often then lead to further weakness. So that's what I'd be keeping an eye out for. I'd be keeping an eye out for price action that can't rally back. So it's one to keep an eye on. It's like, I think there's a good case for letting a profitable trade run still with a wide stop, but it's not an entry point at this time.
Okay, fantastic. Devender, we looked at EOS. It was one of the first tickers we looked at, if you want to go back to that. Let's have a look at A1M and describe how you would assess a stop loss if you bought at 40 cents a couple of weeks ago when the 50 moved above the 100.
Okay, at 40 cents. So that looks like a nice entry. So below the moving averages to above, and the averages crossed, had initial run. There was a little bit of consolidation, then buying this push to a new high. So that makes good sense. So let's say that's let's just say there's our entry there. So an initial stop, I'd be going, well, it's not a lot of structure through here to sort of like pin a stop. But look, I think we could have said like 18% or so below the moving averages. So I look to get a stop below the moving averages for a starter. And that also, like, then we've got some structural points come in. There's a little bit of a low, some highs through here. So that looked like a good initial stop. And then I moved to a wide trailing stop. That's where I use my ATR trailing stop. Now it's starting to run a bit. Like I often I hear people say, look, let's quickly get our stop. Let's get our stop up to break even, so we've got a free trade. I don't really like that, because a stock with this sort of volatility, like look where it's come from, like 31 cents, it's now at 48. Just say this was going to be an interim high. We don't know whether it will be or not. But just say it was. This is a problem with jacking the stop up at your entry point. Just like on a Fibonacci retracement, it just gets you. It could easily pull back to the moving averages, pull back within the Fibonacci range, take out the stop, stabilize, and rally again. So that's why I think you've got to give these stocks plenty of room to move about and consolidate. This has been a big uninterrupted rally. It wouldn't be at all unusual then to see like some sort of a consolidation kick in, where you do get like some back and forth price action. I'm just making something up. It looks pretty messy, but yeah, where you do get that consolidation, the moving averages catch up, and the close stop gets taken out. So I'd be keeping my stop below the 100-day moving average. A general rule, I think, this is how I'd be looking to increase it. It starts below the 100-day moving average. Maybe I could move it up a bit. Maybe I could have it around 35 now, below the 100-day moving average. But I'm also using that calculation, which will probably keep it even a bit further back. I'm not using the 100-day as a trailing stop, because I don't think the 100-day moving average is a great trailing stop. It does get touched during big upward trends when prices pull back. Having a stop a little bit deeper is, I think, the play. So yeah, look, this is a nice emerging trend. I'd stay on it, see where it goes. I'm not worried about trying to hold on to 10 and 20 and 30% profits. I'm happy to give them back if need be, for the potential of staying on a 200, 300% profit. So risk giving. I want to risk giving back those. Well, I'm comfortable giving back those modest gains for the chance of staying on a much larger gain. But who knows with this one? As with all of them, we never know which ones are going to play out. But it's in the race. It's in the money. Let's see where it goes.
Fantastic. Let's have a look at AUR.
Yeah, well, up and away. Trends up. I wouldn't be buying it. It's too far away from the moving averages. It's too hard to manage the risk around. But if I had it, I'd be staying on board. And depending where I was in from, some of these earlier breaks, let's just say, let's look at this break from up 330%. It's at the point where I'd think about, look, is it worth scaling out? Is it worth selling a third or a quarter or whatever fraction suits? My default position is I want to let profits run, and I'd want to maintain a core position. But once I'm up over 300, 350%, particularly if it's becoming a larger weighting in my portfolio. Also, if there's like extreme volatility, I may just like skim a bit off the top. If I sell a third and it doubles again tomorrow, well, I'm not bothered because I've got 2/3 of my positions doubled in value. I'm happy. If I sell a third and tomorrow it halves in price, well, I'm glad I sold a third. So I'm just balancing out risk a bit. And with a stock that's rallied so fast, I think I'd want to skim a bit off the top. But I wouldn't be a buyer up here. It's too stretched.
Okay, fantastic. G'day, Shirley. QBE, please.
Yeah, what's been a nice trend is it's getting the you put a trailing stop on this, see where it's up to. So this has been a motion trader stock for some time. I'm just testing out where, but this isn't motion trader stop, but it's similar. So this is roughly where a motion trader stop would be. So I'd be giving a little bit longer if I was in it, particularly if I was in from good levels. It's been a good trend. It's it's been running for several years, and the wide trailing stop's been doing a good job at seeing off these pullbacks along the way. It is vulnerable structure because we do have that consolidation below the moving averages. You might remember I sketched in structure like this just a little while ago with I can't remember the stock's name, but we get that shallow consolidation below the moving averages makes it vulnerable to further declines. There's been a rally back to the moving averages, but then that was sold. So the structure is vulnerable because we get developing this series of lower lows, and the rallies back to the moving averages are being sold. That doesn't mean it's going to continue down. I'd still be using the trailing stop because you can see over here in this other period during 24 last year. Again, we had the vulnerable structure, but it didn't trigger the stop. It was able to stabilize and then make its way back above. So I'll give it room to continue moving, but there's certainly a red flag on it. It's one to watch. It's certainly not one that I'd consider buying whilst it's below the moving averages. It's got to flip back above the moving averages. This is where I wouldn't have been a buyer down here during August, September 2024, but I would have been considering to buy around October when it flipped from below to above, consolidated back to the moving average, then started to break higher. Then it went from a bearish structure or a vulnerable structure to a bullish structure. At the moment, we're in the vulnerable structure. So no problem holding it with that wide stop, particularly if I've been in it for some time. But it's not an entry point for me at the moment.
Okay, thank you. Let's have a look at NHC.
No, look, not at the moment. It looked like it may have been starting to get a trend underway in August. Like it was doing the right things in August. Like had we looked at it here, I'd be saying, look, it's gone from below the averages to above. It's pulled back to the averages, rallied off the averages. The averages have crossed. I would have said, look, this is a buying point. This is an asymmetric buying point. We can manage risk with stop below the moving averages, and this has the potential to run. That's how I would have assessed it at the time. But this is the thing. It's not like the chart structure doesn't tell us what's going to happen. It just helps us understand, like, are the odds in our favour, or are we trying to bet against the odds? It doesn't mean it's going to work out. The favourite doesn't always win, does it? So in this case, it started to pull back almost immediately. Not initially a concern, back to the moving averages, seemed to rally off it, but then it's continued below. So it's lost that bullish structure. It's not a buy at this point. It's consolidating below the moving averages. The moving averages have crossed, so now we've got that vulnerability within the structure. This may well have been a motion trader signal. I'm just looking like how it's all set up in August, in which case there'd be a motion trader stop loss. Would be like, I use a wide initial stop for the motion trader signals, because that's what the back testing shows provides the best win rate over time and reduces activity, and can generally be a good way to approach things. So I'd still be giving it a bit longer potentially, or I'd also be looking at my time exit. So had I been a buyer, I'd be giving it 60 days. So it's getting very close to my time exit. So had I bought this breakout in August, I'd now be saying, well, look, this is almost certainly going to trigger my time exit. I'd be getting out. Take a relatively small loss early. At the moment, it could be around a 10% loss, and say, okay, no problem. Didn't work out. Onto the next idea, and just keep jumping from setup to setup. Keep jumping from positive setup to positive setup, and when they work, great. Let them work to their fullest. And sometimes you get on the stock like a Drone Shield or an EOS, which just goes run, run, run. Other times you get on ones that don't work. Shut them down relatively early, and put the capital elsewhere. So yeah, a couple of ways to potentially play this one, but it's not a trend that I want to be on at this point.
Okay, good old BHP, please.
Yeah, this is great. This is we've talked about BHP and Rio and Fortescue and the like over recent weeks, and it's all playing out. It's got that nice rally off the moving averages. It's consolidated. It's now broken above the August high. I'd be happy being on this one. We've spoken about resources generally. I'm happy to be. I'd be happy to be in BHP or Rio or Fortescue. In fact, I am in Rio and Fortescue. I'd like to be in BHP, but you can't be in everything. And yeah, I'd be happy letting this one run. It's probably I think it's probably a buy at current levels with a stop. Stop could be, could probably run like a 10% stop on it. See if it goes. It's not one of those ones which is probably going to double in the next 12 months, like some of those small to mid-tier miners. But it's a stock, I think, with plenty of upside potential. It's paying dividends. It's a top-tier stock. Let's see whether this trend continues to gain momentum. It's an emerging trend at this point, but BHP is coming out of this big 3.5-year range. I think it's got great upside potential over several years.
Okay, thank you. Let's have a look at ILU. Thanks, Betty.
Yeah, look, we've got this. I've got trending conditions, trends up. I'd be happy to stay on it. It's a motion trader stock. There was a motion trader signal, a couple of months back. Wouldn't be a buyer at this point. There's a lot of news around rare earths and stuff. It's interesting. Like, I've heard Linus mentioned on the news more in the last 3 days than in the last 3 years. And so people who aren't familiar with the markets and don't usually do it, they watch the news report and go, I better go check out that Linus. Never heard of it before, but heard on the news a few times. So, it gets too frothy, I think, when there's too much news chatter around stocks. So I'd just be careful about entering a trend at this point. Like, looking, it's opened on its highs. It's on its lows for the day, like Linus. Maybe there's some more consolidation coming. Maybe there's a bit of work. I'd be happy staying on the trend. I'd just be probably not rushing to buy on a day where there's a bit of maybe there's some hot money coming in, or some money from people who are less familiar with markets because they're hearing news reports. So I don't want to really come in and buy with that type of money. I'd watch it here, happy to hold, see whether we get some consolidation around the averages. That might set up another entry. We had a nice consolidation through August into September and then a breakout. So that was a nice entry point in early October. But yeah, maybe we get that consolidation. Maybe that sets up another entry point.
Okay, fantastic. I missed over Kirby's earlier, so let's have a look at WC8, please.
Yeah, the potential of an emerging trend. Yeah, look, it's an interesting one. It's been trading along the averages. Averages have crossed. It's now rallied above, consolidating above, but along the averages. Another break to the upside. It's a couple of ways to play this. Well, if I was already in it, I'm happy holding it. I could probably buy it at current levels and have a stop, probably say a 22% stop, just back below these recent lows and below the 100-day moving average. Or I could wait and buy a break above the October high. Maybe it's a case of maybe we get some more sideways consolidation followed by a break, just like we did through September, sideways and then a break. That could be the entry point. So yeah, few plays there depending on the situation, but it's I think it's an asymmetric play in that our downside is relatively contained, or appears to be relatively contained, and the upside potential, well, it's one of those ones that could double or more if it got going. Like, we never know which ones are really going to get going, but yeah, it's a lot of upside potential. If you like this end of the market, it's a setup worth considering.
Fantastic. Mick, he's all the talk about rare earths, yet we have two on screen who are salt of the earth. Love the show, guys. Thank you, Mick. I would say Jason is a lot more of a refined diamond than what I am. That's for sure. So, thanks, Mick. Let's have a look at his stock. That's NTU.
Okay.
Precious.
Thanks very much, Mick. That's great. Very nice of you to say. Yeah, look, this is a similar setup to what we just looked at, but at a more advanced. So you've got these rallies and consolidations into the moving averages, and the lows keep rising. So you've got the rising lows, you've got the rising highs, and then this is what that setup can sometimes do. You can get that big acceleration. As for what to do now, if I was in it, I'm happy holding it, but it's not one I don't think I'd be buying here. It probably requires a bit over 30% stop loss, which is more than I'd probably want to do. And also, it's had that big run. It's more now I want to see whether it can hold those gains. If it can, maybe we get that sideways consolidation while the averages start moving up. And if we can get that, then we say, okay, this is good. The buyers are coming in and underpinning it, and we're just getting that support on the pullback, and maybe that sets up another entry opportunity. What we don't want to see is it just keeps giving back, a rapid give back of the gains, as we've seen in some stocks today. In which case, I'd be glad I didn't get involved. So I'd be just watching what's this next consolidation look like, if that's what we happen to get, in terms of buying it. If I was in it, yeah, as I say, I'd be happy holding it.
Okay, fantastic. Thank you. G'day, Kay. I think we all want to get on to this gold rush. How do we do this, Jace? Gold. Let's have a look. I've seen some great things on the socials around people lining up there in Sydney at the get their gold bullion.
That's interesting. I've heard that, but I haven't seen it. That hasn't made the 7 o'clock news as yet. If I see it on the 7 o'clock news, well, then I might be selling gold stocks. Look, what to do? I talked about this at length in my strategy session on Friday, so I won't go through it all again now because I know some of my strategy session members are watching again. They've already heard it. It's and if you're not a strategy session member, it doesn't cost much. Come across and join up. You can see Fridays, all Fridays commentary and the weeks before that as well. We talk about this at length. This remains an uptrend. So it remains an uptrend, but it's at historic levels of being stretched above moving averages and such. I find this a difficult entry point. It's more a case of I'd be looking at my portfolio, going, should I be lightening some exposure? I want to let profits run, so I don't want to be jumping off early. But if I'm becoming overweight gold, or if I was using leverage, which I'm not, I'd be mindful of that. I want to ride the trend when it's hitting extremes. I want to be on it, but I also want to be wary of it. I want to treat extremes with respect, because extremes can snap back. What would a 25% pullback look like? Move back down below the 100-day moving average, and that'd be abrupt and would cause mayhem in a lot of portfolios. So I don't look. If someone's not on gold and they're looking at it for the first time, thinking, "Look, I want to get involved," I don't know that I'd be getting involved at the moment. It's running hot. The time to be thinking about something is when all's quiet and no one's watching. The early breakouts, they're usually good entry opportunities. There's nothing to say an extreme can't become more extreme, but this is not where I'd be saying, look, I think this is a great buy. We've got to get on gold. There's this massive story longer term. This is the sort of commentary you start hearing now. It's not the time I want to go out and start establishing my position and really getting bullish. That time was months ago. Not now. For me, it's a case of let profits run, but be wary of the risk of volatility.
All right, fantastic. Just letting you know, Jess, we've probably got about 10 to go. So I'll let you go with KSL next, please.
I've got some of this. I've had it for a little while. Haven't looked at it. Haven't looked at the price chart for a while, and that's something like I've got these stocks, but I don't. I do a review of a lot of them weekly, but look, I think the point is you don't need to be looking at your portfolio. Don't need to be going through your charts all the time. Have your levels, know where your stops are. I've been comfortable just letting this run, knowing where my trailing stop is. If it comes up and the exits, well, then I'll move it on. But at this point, it's a motion trader stock. I've got it. It doesn't mean anything particular just because I've got it. It's just like I'm just riding a trend. I'm happy to continue holding it. It's below the moving averages, so it does open a window of vulnerability, but that can happen. As we've discussed earlier, you can get these periods below the moving averages. It is consolidating below the averages, which is so it's not so much a spike and then a snapback. It's more consolidating below. So that's a point to take on board. It's not a buying point for me at this point. This isn't a consolidation into the moving average where it's holding its gains. This is a pullback below the moving averages where it's now consolidating below the moving averages. So there is a point of vulnerability there. But look, I've got my wide trailing stop. I'll continue holding it while that's in place. It's been a big trend. It's be nothing unusual if this spent some time just maybe flipping back above the moving averages and just going sideways for a bit. It's bullish scenarios we can get from this. So at this point, staying with the trend.
Okay, thank you. Next one's from Claude. MTM, please.
Trends up. I'd be happy staying with this one if I was on it. looks like at this point we've got a a zigzag, your classic zigzag pullback to the moving averages. I probably wouldn't be in a rush to buy it. It has been a big run. So look, I do like that. Like, it has been a big run off this 50-day moving average, and like, it's probably come back to a Fibonacci zone too. Yes, come right back into the fib zone. So it's so far its pullback is behaving quite well. It does look like it has been, it's been volatile, but it's proportional. Let's look at this. It's been 32%. This is interesting in itself. It's had a 32% pullback, but it looks like a proportional pullback to rising moving averages. This is why we need wide trailing stops. Like, a lot of people will say, look, I don't want 20% trailing stop is good for me. Well, that's okay if that works for you, but you're not going to be able to stay on this sort of move where they come back. That's why I use ATR stops or volatility-based stops, so you can have it tailored to each individual stock, give them room to move. Happy staying on it at the moment. I want to see it stabilize. Probably like to see it stabilize around the moving average. Then maybe we could consider it as maybe an entry point. But at this point, it's doing the right things. So I'd be happy letting it run. But always know where your exit point is should things change.
Okay, thank you, Evangeline. Let's have a look at DRE, please.
Yeah, like other stocks we've looked at in this category, it's been a big run. It's stretched above the averages. It's holding onto its gains well in the last 2-3 weeks. I'd be happy staying with it. Trailing stop, or my trailing stop, would be back below the 100-day moving average. So I'm giving it lots of room. And people say you're giving back a lot of profit if you're wrong. And well, that's just unfortunately how it works. If you want to stay on big trends, you've got to give them room to move. As we just saw, we saw a 36% stock in our 36% correction in our last, was it 32 or 36 thereabouts? It was a 30-something% correction in our last stock. If you don't give them room to move, you're going to find it really hard to stay on the really big trends. So that usually means a stop below the 100-day MA. Not a buyer at this point because it's had that big run already. I want to see what the next consolidation looks like. Maybe that will set up a new entry point. But for me, one I'd happy to stay on at this stage.
Okay, thank you. We have already looked at ILU, so let's have a look at CHN, please.
Yeah, I've got some of these. It's going okay at the moment. It's broken out of this. See this big range. So plenty of time in this big ranging phase. I probably haven't drawn that particularly well. Something like thereabouts. So it's broken out of that initial rally. It's pulling back towards the moving average and back towards the breakout point. That's all pretty normal sort of price action. At this point, it seems to be building nicely. It's holding on to these most recent gains quite well. You can probably do some Fibonacci's on that, and you can see the 50-day moving average is coming into the fib zone where the price actions come to. So it looks like a proportional type of pullback. I'm happy staying on board this one. It's probably like, it's possibly a buy the dip sort of situation. Maybe I'd like to see it start. I probably wouldn't buy the dip at the moment. I'd like to see it stabilize a bit more, but then I could be being cautious as well. Where is it at the moment? It could be bought maybe with I think if it were bought currently, I'd want the stop back below these recent highs. So probably looking around 18%. It's an interesting one. Maybe it's a buy at current levels above the moving averages with an 18% stop. Alternatively, just seeing if it consolidates, maybe get that platform and get a breakout. It's a stock I think has that upside potential, and its structure's developing nicely.
Okay, thank you. Let's have a look at LTR.
I've got some of this one too. And it's trying to make its way higher. It's broken out of this sideways consolidation, which it spent a couple of months in. So we've rallied out of the consolidation, rallied off the moving averages. It's it's like it rallies and it comes back, rallies and it comes back, rallies and it comes back. Linus did something similar, and then Linus just went. Not to say this is going to do the same thing, but that can happen when you get this persistent push higher with pullback, push higher and pullback. At some point, you can get that point of acceleration where it goes. So I'm positioned for that to happen. Whether it happens or not, we don't know, but I'm positioned that way. Whether we get a bit more consolidation, whether we get a little bit more pullback to Friday's low, let the moving averages catch up a bit more. Maybe we get another we've got a rally, maybe we get another sideways consolidation of the averages and then another push. Many ways it can work out, but I'm happy to be long this stock. Could it be bought at current levels? I think there's that, but definitely has that potential for more consolidation. But it could probably be bought on about a 20% stop, maybe just around the 100-day moving average. So it's got that potential. It's got that upside potential, which is what I want. And should that not develop, well, there's clear stop loss levels which aren't relatively that far away. So it's it's something to consider.
Yeah, another good one there. Did we have a look at ASM, Jace?
No, haven't seen that yet. It's happy to stay on board. Can't buy it at this point. It's run too far. Had a nice breakout. Had a nice sideways consolidation. Prices started to run. That was the entry point. That was back in early October. So if you got on then, well done. If not, it's wait for the next opportunity, be it in this stock or another one. I need to see the next consolidation now, and ideally it holds on to most of these recent gains, and we don't see it quickly coming back to the 50-day moving average. That would sort of mess the whole thing up. But at this point, it's a one I'd be happy to hold.
Okay, fantastic. The next one's SPD.
This is trading nicely. It was a nice setup, nice consolidation, sideways consolidation of the averages. We had a nice clear breakout in late September, and prices have run. I'd be happy holding this one. It's not really an ideal buying point for me. I'd like to see more of a consolidation develop rather than just like a few down days. So it's probably not enough structure around here for me to buy it at this point. My buying point would have been a little bit earlier. If I was on this one, I'd be happy staying on it. Usual thing with my stop losses back down here around the 100-day moving average, giving it lots of moving space, and hopefully staying on something which can extend quite a bit higher.
Thank you. DDR.
Continues to trend higher. Like this is this has gone from below to above the averages. Averages have crossed. That trend's developing nicely. So this is a stock I'd be happy to stay on and see where it goes. Had a recent consolidation into the moving averages, recent break. Look, I'd be happy staying with this one. Keep my trailing stop below the 100-day EMA and see where it goes.
Okay, fantastic. I'm not sure what Robin Holds is, but let's have a look at RHI. Thanks, RHI.
So again, we've got the do we have like a base in place here? It's flipped from below the averages to above the averages of cross. It's still early in this one's development, but if it can hold its gains hold these recent gains above the moving averages, maybe it sets up the platform for the next leg higher. I'd probably be inclined just to watch it at this point. If I was already in, great. I'm happy to stay in. But I was thinking of getting in. Maybe it'd be a case of watching, see whether we get that classic sideways consolidation while the averages start to catch up, and that could be the entry point in the rally off the averages. Be an interesting one to keep an eye on. Certainly some potential for this to turn into something.
Thank you. Last few, AZJ, please.
So this was interesting. It turned up in the motion trader signals just recently. Yeah, look, I like what it's doing. It's been a stock which has been mostly below declining moving averages for some time. It's been a real down and out stock, but it's now gone from below the averages to above. We've had that classic consolidation along them and a secondary break higher. Yeah, this is a trend I could consider going with, see whether it develops. Initial stop, the motion trader stop's going to be wider, but the initial one, if someone wanting to be more aggressive, it could be like about 7% could do it, just back to just below where prices broke out from and around the 50-day moving average. Upside potential, well, look, it's quite open. It's probably not one of those ones which is going to be up 100% anytime soon. But it's I think there's plenty of upside potential there. Pays dividends, and it's that risk for getting on board is maybe as little as around 10%.
Okay, thank you, Dennis. AR9, please.
It's I don't like how it's pulled back so much. It just hasn't been able to hold on to its gains. It's just continued to slip. I wouldn't be a buyer of this if I had it. Well, like depends from where. If I've got it up the top end of the chart, I'd already be out. It's come back too far. If I happen, like this isn't one I would have been able to get on because it by the time the moving averages crossed, the share price had already run. But like had I been preempting it and I'm in at these like really low levels, yeah, I could. I don't know. It's a tough one, and this is typical of these low price ones that they get excitable. Everyone gets excited, and then they make their way back down. Or sometimes you just get a deep pullback, and they can try and run again. It's I'd be at the point where I'd be going, okay, where am I getting out? Like I don't know where our entry point is. So I'm just I'm working with limited information on it. But if say I bought in at 6 cents back in May, I might say, look, where things are now, because I can't say, look, I would have got out higher. Just looking at where it is now, it's opened on its lows, it's on its highs. It's it's one bar. It doesn't really doesn't make a trend. But maybe I could say, look, I could give this till I'll give it to 9.3 cents or something like that. If it hits that, well, so be it. I'm out. I'm not just. I've got to have that line of the sand. Otherwise, I could just keep hanging on and hanging on and hanging on and hanging on. It's back down to 6 cents. So I don't want that. So I've got to have a line somewhere. And if it clips it and then rallies, well, it's just been one of those unfortunate situations. But I'd be looking at my exit point at this stage, not thinking about where to get in, but thinking, okay, if I haven't already thought about it, I need to know where I'm getting out. I don't want to just stay in this one and watch it keep eroding.
Okay, fantastic. We looked at DRO right at the start of the show. Let's have a look at CU6, at least at the start of the tickers that we look at. But CU6.
Yeah, it's still potentially developing into a trend. It's holding onto its recent gains so far. I'd be happy if I was in. I'm happy holding it. If I'm not in, I'd probably be inclined just to watch it, see whether we get a bit more sideways consolidation. That could set up another buying opportunity for a push higher. Or it may not, it may not play out either. It could be like, maybe maybe that was the big move, and now we're going into just a lengthy period where it doesn't do much at all. Just because the stock's had a big move in previous years and it's had a bust doesn't mean it's now going to go back into another boom. Often I see these stocks, they have a boom, they have a bust, and then they just have years of like it starts something and then it comes all the way back and just doesn't do anything for ages. So there's various ways this could play out. I've got no problem being on board and giving this the benefit of the doubt at the moment. But I'd also have my exit point be just back below probably the 100-day moving average. And if it comes back there, well, I just say, look, it's just not working out. I'll jump out. But if it can hold these recent gains, can stabilize above the averages, well, yeah, maybe there's going to be another entry point for a push higher. So one to keep watching. I know we watch it a bit. We talk about it most weeks. I'm sure we'll look at it again next week too.
All right, last one, Jace, if we could have a look at VEE, please.
Well, we're starting to get a rally off the moving average. Volatile stock, like big runs, big declines. It's been a tricky one. It hasn't really been. It's got history of this too. Big runs, big declines. It's doesn't mean it can't get a big trend going and stick with it. But yeah, it hasn't delivered so far. If I was on where would the look, I'm not on this one. I would have found this one a difficult one to get onto it. Just how it's all set up with, by the time the moving averages crossed, it was high. Then it quickly came back. I wouldn't have liked the quick give back. And then it started to stabilize and then it gapped higher. So then it would have been like too stretched. So I'd find this a difficult one to get on. Looking at it now, if I was on board, particularly from lower levels, great. I'm happy to stay there. I could have my stop below the 100-day moving average, so I don't need to have too much of initial capital at risk. In terms of buying it, though, I'd probably want to see it just get some more. Maybe, and we mightn't get it. It might be another period like we saw in September, where it just continues to edge up and then accelerates. Sometimes I don't get the setup that I need and I don't get in. But if we were to get some sideways consolidation, that could be the stepping stone into this one. Probably not one I want to rush into now, but if I was on board, as I say, I'd be happy to stay on board, see whether this time can deliver a more lasting trend than some of these previous attempts. It's probably not a standout for me, but I can see that something. A positive trade could come from it, but it's just messier than some of the other setups we've looked at.
Fantastic, Jace. You've gone through a lot of tickers once again today. So thank you, viewers, for all those amazing ideas. Sorry if we didn't get to them all. I'm going to leave you on this one last question. It's a very general question once again, but we talk about this individually per stock, right? But I guess you could have a general answer to it. Many stocks have moved from Rob. Many stocks have moved around 100 to 200% in the last month or so. Should one wait for a couple of weeks of consolidation or just buy them in the current hot market?
I'd be inclined to wait for the consolidation. Chasing stocks which are up a couple of 100%, like what we've seen over the last few months, it's an extraordinary market. We don't usually see this sort of price action. We do see mining booms and stuff, and we do see extraordinary gains, but they're not. It's not a year on year event. They tend to be separated by. We get these periods of heightened excitement and then things just settle down a little bit more most of the time. I find it hard chasing stocks which are up a couple of 100%. Yep, they could go up another couple 100%, but then they could also quickly come back 50%. It's a difficult environment. We don't want to get carried away thinking it's easy. Once we start thinking it's easy, it's usually close to when things get difficult, and they always get difficult. Yeah, it was just so interesting, the boom and off the COVID lows, how I started seeing all these things online about football players who are making all this money trading the market while the games have been cancelled and so on. It's like uni students saying, "Oh, I don't need to work at the local fast food anymore because I'm making all this money online." It's not easy, and this was pointed out at the time by various commentators, and sure enough, it got hard again, and you don't hear from those people anymore who thought it was easy. So it seems pretty straightforward at the moment. You buy something with mining limited, and it goes up quickly, but there will be a point where they come down quickly, and there'll be a rush to sell. I don't know when that is, so that's why we just manage risk, let profits run, but don't get carried away with great gains and thinking, oh, look, I'm just going to keep piling in. I'm going to double up. I'm going to get some leverage. That's when you put yourself in a vulnerable position for a sudden turnaround. Be careful. I think want to keep taking risk. That's how we make money. We've got to take risk, but not too much risk. Keep it all under control.
Yeah, I think that's some fantastic parting comments there, Jace. Look, it all comes down to me. It all comes down to that trading plan and having the plan, regardless of the market. You are neutral in one sense. Yes, where bias is bullish, but you are neutral to what's happened, and just playing the price action and doing it for the individual stocks. If you're an active trader, right? We are midterm to long-term active traders. We don't day trade and try and make of money, as you may mention the COVID boomers there that were trying to cash in on that rise and then didn't know how to manage it when it wasn't going that way, right? So all the time wasn't going that upward trajectory all the time. So I'm once again grateful for all your learnings over the last couple of years, Jason. I'm sure everyone else is over on the other side of the screen. Thanks once again, everyone, for popping along. We'll be back again next week. Thank you, Jason.
Rog, it's been fun. Hopefully everyone's found that interesting. And yeah, as you say, Rog, next week we shall be back.
Thanks, everyone, and have a great day ahead. Bye-bye.